Good evening, everyone. Welcome to the channel. Today I am going to talk about GFSEC interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. GF Securities Co. Limited offers a wide range of businesses and services to its clients. These include capital market services for corporations, individuals, institutional investors, financial institutions, and government clients' investment banking services such as equity and debt finance. Sponsor and financial advisory services, wealth management services including trading of equities, bonds, funds, futures, and other tradable securities, financial products such as fund products, asset management schemes, trust products, margin financing, and securities lending, broker services to institutional customers, asset management, public and private fund management, and alternative investment services, trading and sales services for equities, bonds, funds, futures, and other tradable securities, investment research, and asset custody services. These services are provided through four main segments: investment banking, wealth management, trading and institution, and investment management. The stock price of GF Securities has not skyrocketed by over 186.36% in the past year, despite significant financial performance and news announcements. The company's earnings growth was 75.3%, with revenue increasing by 17.6% and earnings by 38.73%. A notable surge in net profit for the first half of 2025 was driven by a dual-engine growth strategy, but this does not account for the reported stock price increase. It appears that the benchmark analysis mentioned 1776, 2.81x, 181.4% as a comparative metric, rather than an actual historical return for GF Securities in the past year. The primary drivers of revenue growth and decline. Revenue growth is primarily driven by a combination of factors. Investment banking commissions from underwriting shares and bonds, as well as fees from wealth management services, have contributed significantly to the 18.43% increase in total revenue and other income. The company's research ability, financial product research and sales capabilities, professional asset allocation capabilities, and investment banking service system with a full business chain throughout the life cycle have also played crucial roles. In addition, strong leadership and implementation of new development concepts and policies have enabled the company to remain among the top in the industry. Domestic market growth has been driven by a 14.13% increase in financial products sold, while overseas markets have seen year-on-year growth in net sales, income, and balance of financial products and commissions for multi-market transactions. On the other hand, revenue decline is primarily attributed to a decrease in interest income from debt instruments at fair value through other comprehensive income, as well as a decrease in interest income from deposits with exchanges and financial institutions. Fund products have also seen a decline of -109.68 million RMB, while trust products have declined by -158.68 million RMB. The company is generating positive operating cash flow, indicating a significant improvement over the previous year. In fact, it has improved by RMB 40,084 million, with net cash from operating activities increasing to RMB 12,681 million in the current period compared to a net cash outflow of RMB 37,463 million in the corresponding period of 2024. This positive trend suggests that the company's operations are generating sufficient cash to cover its expenses and investments, indicating a healthy financial position. The company's debt level has undergone significant fluctuations. While there were instances of stability, such as on pages 130 and 131, notable increases occurred on pages 89 and 183. The interest expenses also experienced mixed results, with decreases observed on pages 41, 136, and 143, but an increase due to a higher interest rate on page 215. The company's financial performance reveals a mixed picture across various segments. On the positive side, wealth management stood out as one of the top performers, with significant revenue generated from this segment. Investment banking also showed strong results, while institution and investment management demonstrated impressive growth. Institutional trading and management also performed well, contributing to the company's overall success. However, there were some underperforming segments, including others, which struggled to meet expectations. Additionally, trading and investment institution incurred significant expenses, indicating areas that require improvement. Management is optimistic about the company's outlook due to strong growth in material asset restructuring transactions and successful completion of major asset restructuring projects. The company plans to expand its business layout, develop core competitiveness, and focus on fulfilling real economy requirements with financial services. To achieve this, management will prioritize stable shareholding structure and corporate governance system. In addition, the company is focusing on 5 key areas: technologies, green finance, inclusive finance, pension finance, and digital finance to improve products and customer service. The credit risk of the financing business is managed at an acceptable level, while currency risk is relatively manageable. However, the company is exposed to price risk arising from fluctuations in financial asset prices. Management's strategy involves setting up a merger and acquisition business ecosystem and investing in new areas such as GFHK. Overall, the company aims to continue its high-quality development and expand its business layout to achieve long-term growth. The company's financial activities have been marked by strategic business decisions. Notably, it has made acquisitions through the establishment of a new subsidiary, GF Futures, Singapore T. Limited, under its existing entity GF Futures Co. Limited. This move is likely aimed at expanding the company's reach and operations in Singapore. There are no recorded divestitures, indicating that the company has chosen to maintain control over all its business units. The company has a history of paying dividends to its shareholders. Specifically, it is mentioned on multiple pages that the company has paid dividends, with one instance stating that a total of RMB 3.04 billion was paid out for the year ended 31 December 2024. However, there is no information available regarding share buybacks. That concludes the financial summary for GFSEC. Feel free to comment below, and I will be happy to answer them when possible.